If I'm making $100,000 a month and now I'm making $50,000 a month, am I going to be able to continue sustaining my business? I'm going to be able to continue moving forward, or I'm going to lose a lot because I can't pay my debts. I can't afford this. I can't afford that. So that's one of the things what I mean by be recession proof. Being at that point that if you lose all your revenue, how long are you going to be able to sustain yourself without having incoming revenue, income?
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Get ready for the Midwest Real Estate Investor Conference in Grand Rapids, Michigan. Join hundreds of real estate investors for networking, learning, and growth. Be sure to mark your calendars for April 24th and 25th of 2025. Hello and welcome to episode 467. My guest today is a highly sought after business strategist who helps entrepreneurs build to 8 figures or more through optimized systems and processes that they can scale fast. Edwin Carrion's faith in God and U.S. Marine Corps background have helped him adapt and turn around businesses in several industries, including real estate development, where he has built and sold over $30 million. With over 20 years of experience, Edwin is the founder of Carrion Investment Group, where he developed a diverse business background in design, organization, legal, financial, marketing, capital financing, and strategic negotiations. Edwin, welcome to the show.
Brian, thank you for having me here today. And to everybody listening, good morning, good afternoon, good evening, whatever part of the world you're in. Get ready to get a couple of golden nuggets and learn about Brian and I a little bit more.
Why don't we start with you just telling us a little bit about yourself and how you became both an entrepreneur, a coach, and real estate developer and investor.
Born in Quito, Ecuador, raised by a single mother. I was fortunate enough to come to the United States at 12 years old. And one of the things that I always knew I was going to be successful, especially coming and being raised by a very humble background, not even humble, like poor background. And I knew I wanted to be successful. So after my time in the Marine Corps, I had no idea, like most 22 years old, what I wanted to do. And my mother goes, "You should become a developer." I'm like, nice. What is that? And I had no idea what that was. A developer could mean different things, right? It could be like a network developer. It could be technology, software, whatever it was. So she explained to me, it's real estate. All you have to do is buy land, build a house, and sell it. I'm like, oh my God, that seems like the best, easiest business in the world. And sure enough, that's what I started doing back in 2002.
You're the first guest who has come on the show and said it was their mother who encouraged them to get into real estate, and not just real estate investing, but developing. What is it about your mother that she would have that kind of insight?
She's a commercial insurance agent, and she owned her own commercial insurance agency. And she had a couple of clients that were developers. So the clients will come to her and say, "Hey, I need you to insure this property for me. I'm going to start building a house on it." And, the insurance will go for, let's say, $100,000. And then later on, they'll come back and say, "Hey, I just sold the house. The client that is buying the house needs insurance. Can you give me a proposal for $350,000? And she'll see that, how much they'll buy the land for and how much they'll sell the property for. I'm like, they make a lot of money. So that's the route that you should go.
How did you start then? Did she introduce you and then you started networking with them, or how did you get into development?
I left the Marine Corps and I was able to raise $100,000. My mom actually pulled a line of credit on her house, going into debt, not knowing if I was going to make it. I just believing in me. And I bought 2 pieces of land. I started doing research. How do you buy land? At that time, there was no Google. There was no social media. It was just only Yahoo. So on Yahoo, I'm like researching. How do you do a developer? How do you build houses? How do you find land? And I bought 2 pieces of land without looking at them. I just started searching online and I found 2 properties. And with those 2 properties that I purchased, I remember I purchased them for like $15,000, both of them. After I bought them, left the Marine Corps. I was in Miami and I sold one of the pieces of property for the same amount that I bought both of them. So I ended up having one free one. I'm like, oh, this is cool. I like this. That's the moment that I got hooked into. So then in the same surrounding area, I found another property that was for sale, and I bought that property. And that's when I started doing development. I had no idea about construction. I realized that everything I learned about construction, I was learning how to build homes in the Midwest, which is, everything in wood stick, versus in Florida, everything is concrete and steel and blocks. So I had to relearn. So one of the contractors that my mother insured, she introduced me to him, and pretty much he gave me the blueprint of how to build a house. He's like, hey, this is how you're going to build the first part. And he gave me a 10-step list. And I just followed those steps down to the T. I'm like, make sure, okay, the first thing we need to do is this. Second thing, then I started researching and started calling architects and started calling all these trades. And it was hard because I was 22 years old, and a lot of people don't take you seriously when you're that young. So it took a while. And then finally, in order to build, I needed capital. So one of the things that I did is actually I went to a couple of banks, and there was this one lady that really helped me out a lot. And she thought when through our conversation, I sent her all the information. Finally, when I went to meet her, she's like, hey, I thought you were an older person. You're such a baby. I'm like, I know, but I'm good for it. And I kept telling her, I'm very good for it. So she's like, you know what? I'm going to give you a chance. And sure enough, she was the first person that gave me an opportunity, gave me a construction loan. And with her, we got the first construction loan. We went to two, then we doubled. And every time I kept going back, we kept doubling the amount. So the first loan was almost $100,000. And we got all the way to almost $5-6 million worth of loans.
I want to talk about this 10-step list that was handed to you by a developer. What can you share some of the things that were on that list? Because you're starting off fresh. You don't know what you're doing. That sounds like a very powerful list.
It wasn't a developer. It was a contractor. So he knew how to build houses. So this 10-step list was just how do you build? What are the first steps that I need to do to build the house? The first thing comes the foundation. So we have to do the foundation. Then we have to do the blocks. Then we have to do the tie beam. Then we have to do the roof trusses. So it's kind of like that list of what to do. What steps to follow? What comes in? What's the sequence of building a house from start to finish? And that's pretty much where the first 10 steps that I had to follow. And then along the way, between those steps, there was maybe another 50 other things that I needed to figure out how to do things.
Once you have that list, you have to find the people to carry out those different steps. And that's a whole different thing. How did you go about that? Did you have a pipeline or that you were able to plug into, or did you have to go and vet all of these people on your own?
I had to go out and vet every single one of those on my own. And I think a lot of the discipline that I learned, that I gained in the Marine Corps, helped out a lot, of how to be there. I was on site every single day, making sure that the project goes along. I was I was doing things, manual labor as well on my own, because I wanted to learn how things work. Because one of the things that I always tell somebody is if you don't know how to do something, it's very hard for you to be able to manage that. So I needed to figure out, okay, are they doing it? How are they doing it? So that I understand. I became very good friends with inspectors, the city inspectors. So they will come and they will come on site and they will explain to me, okay, this is how you do things by the code. This is what the code requires. This is how you do it. This is the next step. This is what I'm going to check when I come for the next inspection. So every time I was always ready, one step ahead when the next inspection came, making sure that everything was done the right way. I started learning how to double check the work. So when the second house came along, I already knew, because what I did, what mistakes I'd made on the first house and the third house and the fourth house. And then eventually, I was able to just hire a project manager and just kind of me focus on building the company versus me being on the site every single day.
Talk about the economics then. You bought the two pieces of land with the $100,000 that your mom was able to pull out of a line of credit. You sold one of those pieces for, it sounds like, close to 100,000. So you were in it for zero, but then you had to finance the construction, and you had the relationship with the lender who took a chance on you. But what were the economics? How much did you, on that first project in particular, how much money did you have to come up with to build that first house? How long did it take? And then what kind of profit were you able to make off of it?
It took me around 6 months from the beginning to the end, because we were only building 4-bedroom, 2-bathroom houses, 2,000 square feet at most, 1,600 to 2,000 square feet, 2,000 if we had a garage, 1,600 if we didn't have a garage. But then the economics were simple. The land, I was buying it for $25,000. That was my average price, $25,000 for the land. And I was building it or with I think I was like $120,000. So I was all in like 150,000, and my sales price was 250K. So I was making $100,000 in 6 months per property.
And then you just kept laddering up and repeating that over and over?
Yes, yes. I kept doing that and I kept repeating. And I had a lot of projects going at once, right? My goal was always to become, very rich and have a lot of money. So I'm like, okay, what do I need to do to get to $1 million? I mean, I need to build 10 houses. Okay, I want to make $5 million. I need to build 50 houses. And then I'm building 50 houses. I have all these houses going on at the same time, and I'm going crazy, and my staff is big, and I have a huge staff now. I have a couple of project managers, I have office managers, I have accountants, I have all of this. Then I realized that there's one developer that my mom is insuring. He is making the same amount of money building one house. I'm like, how's he doing it? Of course, he's building multi-million-dollar projects. So I'm like, okay, I need to do that. And sure enough, I started heading that way. And when I started heading that way towards building multi-million-dollar projects, I had like around 5 projects on the pipeline to build like three to $4 million homes in Coconut Grove in Miami. And I was over leveraged, super overextended, over leveraged because I wanted to continue scaling really fast. That 2007 came around and the market crashed. And that's when I went bankrupt and I lost everything and I went to zero. So right before me starting to break ground on a multi-million-dollar project, that's when I went bankrupt.
So you're talking about 2008, the Great Recession, everything fell apart, and people like yourself who were overexposed and overextended really took the brunt of that. Which brings up the question, you were building starter homes and you had a lot of smaller, less, I guess maybe you could say risky exposure to those. If you had continued with, and I'm just curious about that point in time, if you had continued with the starter homes and not taken the bigger risk on the larger multi-million-dollar homes, would it have been the same situation for you?
No, I think it would have been a lot better. I would have been in a better situation if I would actually continue with the larger homes versus the starter homes, because when we enter a recession, when the economy gets hit hard, the people that suffer the most are the people that are at the bottom, the lower income, the middle class. Those are the ones that really, get hurt and feel it, versus the people that have a lot of money. There's a lot of people that make a lot of money like I did during a recession. So we're scaling up to a bigger house, or the people that lost a lot of money during a recession, they're moving from a $10 million house to a $5 million to a $3 million house, but they're still staying in the millions.
You had great momentum and you were being very aggressive about growth, and economic conditions, which you had no control over, turned everything upside down on you. Going forward, I mean, obviously you've recovered from that period, but how does that inform you now as you continue to do development and start businesses?
A big learning lesson from that was, number one, always be recession proof. And I think that's number one. The second one was, do not over leverage, never be over leveraged. And I know that was like the biggest thing that happened to me, being extremely over leveraged. So when I started my second major company, which was in the precious metals business, I made sure that our leverage was very low. So we actually had a cash business, and everything was cash. Within a couple of years, we were making $1 million a month profits. And I was able to exit that company and sell that company, but we had zero debt. That was a company that had zero debt for many years. And because I was so afraid of borrowing, that I made sure that business was a zero debt business.
How does one start a precious metals business?
If you guys want to learn, I have a book on Amazon. It's called Secrets of the Millionaire Gold Buyer. I have all the details, A through Z, how I started that business, how I scaled that company, how I sold that company. So, but pretty much it was precious metals. During a recession, everybody needs money, and we were there to fulfill a need. The people need was to have money, and our need was to make money and to help the environment. And that's why we got into the precious metal business. I mean, as now you understand that we're entering into a recession, and we have been like, the market has been very tough for the past couple of years. So that's why the precious metals gold has continued to rise. Now it's up to its high is at 2,700 right now.
There's two things you said. One is be recession proof. Going forward, being recession proof. And what does that mean to you? I mean, how do you, as a real estate investor, be recession proof?
Okay, so one of the things that I talk about how to be recession proof is, number one, never be over leveraged. Number two, if you think about your business, right? Even if you're in the real estate business and you're focused on revenue, and your revenue and you have to do this exercise. If my revenue drops significantly today to 50%, if I'm making $100,000 a month and now I'm making $50,000 a month, am I going to be able to continue sustaining my business? I'm going to be able to continue moving forward, or I'm going to lose a lot because I can't pay my debts. I can't afford this. I can't afford that. So that's one of the things what I mean by be recession proof. Being at that point that if you lose all your revenue, how long are you going to be able to sustain yourself without having incoming revenue, incoming income? And a lot of companies don't because they're over leveraged. So when we talk about leverage, we talk about, okay, it's good to have debt. And I learned that again, it's good to have debt, but make sure your debt is very low. Like your debt to income ratio, when people talk about that, is like, no more than 30%. And my friend taught me that. He's like, hey, it's okay to have debt, because at one point I wasn't able to continue growing because I didn't want debt. I wanted to be debt free. And I was debt free for many years, for like 6-7 years, completely debt free. But then it's like I needed to grow and I couldn't keep growing anymore because I had no more cash. So in order to continue growing, I had to go out there and borrow money and get into debt. So, but I realized that, as long as I keep my debt low, I'm okay if something happens, because I'm going to be able to continue paying all my bills and continue growing and not lose the things like I lost back then in 2007.
Robert Kiyosaki calls it smart debt.
Having smart debt, exactly.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Save the date for the Midwest Real Estate Investor Conference, happening April 24th and 25th of 2025 in Grand Rapids, Michigan. This event is the perfect place to connect with fellow real estate investors, gain valuable insights, and elevate your real estate game. With a lineup of expert speakers and numerous networking opportunities, you won't want to miss it. Going back to the precious metals business, you started that with no debt. Now, I haven't read your book, but how do you start any sort of venture without debt? I mean, do you just come up with all the money yourself? Are you raising it from investors? How do you go about that?
One of the things a lot of people always said, right? We need money to start a business. And that is the truth. 90% of businesses, you are going to need some type of capital. You are going to need some type of money. But the one thing I tell a lot of entrepreneurs is that you do not need to have the money. If you have a proven business model, and if you're a person of value, if you're a person of worth, and you're a person that's going to be able to deliver what you said, then you will get funding. So for us to start the gold buying business into the precious metal business, we needed $300,000. At that time, I was bankrupt. I had no money, but I was able to raise $300,000 to start that business in less than 30 days. The moment I raised that money, we were able to duplicate and pay that money back. And, because I believed in that business so much, I was paying 5% interest per month just to be able to borrow that money. And, I knew I was going to make a lot more, and I made a lot more. And I was okay. And I was confident into borrowing into that much money. And from there, once I sold that company, I went back into doing what I love doing, which is real estate development, building multi-million-dollar homes. And this time I went back, because I was saying, whenever I go back into real estate development, I'm going to start off where I left off. And I left off building multi-million-dollar homes. That's when I went back to it. I went back into building multi-million-dollar homes.
What does that business look like today? Your real estate development business, building multi-million-dollar homes. Are you building multiple of them, doing one at a time? I mean, how are you kind of mitigating your risk based on your past experiences, but still growing at the same time?
We started with building one, and then we scaled up into building multiple of them. And then by 2017, I exited that company. So I sold that company to my prior business partners. And for the reason, the values were not aligned. And one of the things that I learned, now that I'm wiser, is not all about making money. It's also about, having a good working relationship, working with people that have your beliefs, your values. And I exited that company in 2017. It was a great exit for me again, the second time in my life. I retired for the second time by the time I was 37. And then I bought a transportation company. And I took that transportation company from 8 trucks to over 40 trucks in just a couple of years. And we're able to get named into the Inc. 5000 as one of the fastest 5,000 growing companies in the United States. And I just exited that company like around 4 or 5 months ago.
Wow, congratulations.
Thank you.
You're able to repeat this pattern of buying companies, getting into starting a business, seeing it through successfully, exiting, and they're in very different fields. I mean, trucking is very different from precious metals, development. What's the commonality? What's the common denominator that you're able to plug into and find success?
Couple of things. I think number one is the mindset. Knowing that I could start something and make it scale really fast within a couple of years. I think that has been one of the things, because when I'm very passionate about something, I put my heart or soul into it, and I know how to do it. The second part is knowing what the steps are. And the steps are going back into the basics, right? And I tell a lot of entrepreneurs, I've been very blessed to speak, to over 10,000 people now in different conferences. And every time I step on a stage, I ask, how many of you are entrepreneurs? Maybe 70% of the room raises their hands. And when I ask them, how many of you have a business plan? Only 10% of the room raises their hand. And that's the basic. The basic is knowing what you want in life, knowing what you want for your business. And a lot of entrepreneurs don't have a business plan. So when we go back to the basics is, business plan, cash flow sheets, those huge outrageous goals. And then again, the scaling part is going out there and understanding that we need to implement systems and processes in our business. So we step out and we're not working in the business, we're working on the business. And, it seems very, very difficult to do this, but it's very simple once you let go of those emotions and you're able to step back and you put that entrepreneur ego aside and you let everybody else carry the torch.
What is the importance of a business plan? And in your opinion, what should a business plan include?
The importance of a business plan, I mean, again, one of the sayings that I always say is that if you don't know where you're going, you will eventually get there, right? So what that means is that, yeah, I'm going to become successful, but I don't know when, because I have no plan. I have, one of the things that I always used to say, I'm going to be very rich, because, that's what I wanted. But I didn't know when I wanted to be rich because I had no plan. I just knew that I wanted to do that. And I became successful in real estate development, right? But then once I learned that putting that business plan, hey, I'm going to be successful in 2 years. I'm going to take my business has to get to $2 million in the next 2 years. Okay, now we reverse engineer. What do I need to do to get to that? How do my monthly sales need to be? How do my daily sales need to be? How many clients do I need to have? What is my cost acquisition is going to be? What is my sale per client is going to be? I don't want to be in a business where, my profit margin per client is going to be $5 because it's going to take me a long time and a lot of clients to get to $1 million. So I need to figure out, okay, I need to be at least $300. I need to be at least $500. Then, putting value in yourself. How much do I want to be worth? I want to be worth maybe $2,000 an hour. So what do I need to do for my business to grow and for me to be able to be compensated those $2,000 per hour?
You're also a highly sought after business consultant. You consult on other people's businesses. What's a typical conversation look like when you're talking with a business owner who's struggling and comes to you for help?
It goes into everything. And to me, what I love to bring to the table is having that balance. And I think what I realized of talking with a lot of entrepreneurs is that they don't have the balance in life. They either have their successful business, but their marriage sucks, or their personal life sucks, or their relationship with God sucks, but they don't have that balance. And then there's a lot of gurus that they're saying that you cannot have a balance in life. And what I do is I teach them that you can have the balance, because if you're not happy within yourself, how can you have a successful business if you're not happy? How can you have a successful marriage if you're not happy? So everything starts within. Everything starts with the one person of, okay, what are those limiting beliefs that I have in me that have held me back from growing my business, from scaling that business. Like I talked about a minute ago, that entrepreneur ego. Why can't I let go and let somebody else handle this so I could focus into what I'm really good at? And, or maybe why am I stuck always to, $1 million or $2 million? Why can't I get to the 10? Why can't I get to the 20? So is working on the personal part, on the personal development first. Then goes back into the business part. Okay, let's start putting the systems and SOPs and strategies into place and processes into your business so like that your business could continue scaling without you and turn a business into an asset.
When you talk about the systems and the processes, do they all look similar across the board, or is it different in each situation?
They're all similar because, when you think about the wheel, we're not here to reinvent the wheel. We're here to perfect it. So, as a real estate investor, as a real estate developer, we all do the same thing every single day. The big difference is how do we do it? And I always tell everybody, it's like, you see that there's some real estate investors that are really struggling, and then you see some of them that are making hundreds of millions of dollars a year, right? The difference is not their business model, is the person that decided to put the systems and hire the right people and put the right people in the right places and let go of a lot of things. And that's what we have to do about business. It's the same thing. The systems across all industries are the same. They don't change. It's how you put that into there, how you measuring those systems, how are you following those KPIs? Are you looking at the data every single day? Are you focusing into what you're supposed to be focusing into instead of focusing into what you're not supposed to be focusing? A lot of them focus into, the expenses, and instead of focusing into the profit side of the business, into the sales. And I'll tell you, to me, I don't care how much money we spend. Are we getting the results that we want? So let's focus into results versus what's going out, what's coming in versus what's going out.
What are the systems you employ?
There's a lot of them. It depends. On my real estate development business, I look for growth. My real estate development business is all about wealth creation. So I learned that, each one of my businesses have to have a different meaning. So when I had my transportation company was my cash flow business. So cash flow business, my metrics were, hey, okay, how many trucks do we need to have in order to get to the revenues that we need to get? And making sure that we're staying on trend towards getting that many trucks. On the real estate development side is more about long-term wealth. Okay, am I making the right place? What properties do I need to buy? Where are the emerging markets that I need to go and purchase properties so they can become good assets because I want them to appreciate faster?
Edwin, how would our listeners find out more about you or get a hold of you?
You can always find me at Edwin Carrion 78 and all my social media channels, Instagram, Facebook, Twitter, you name it, I'm there. I have a lot of learning videos, a lot of educational videos on YouTube. So go to my YouTube channel and you can find me there. But one of the best things that I said, if you have any questions about real estate development, about business creation, business growth, send me a message, send me a DM. Nowadays, a lot of us that are at a different level want to help everybody else continue growing, continue scaling. So all you have to do is send a message and you'll see that we'll respond.
And what is your favorite hack or app?
My favorite app, I will tell you, right now I've been trading a lot. So it's Webull. That's the one I've been in every single day. So that's the one I'm using every day because I'm trading a lot right now.
What's it called?
Webull.
Spell that for us.
Webull. Webull.
And that's for trading stocks?
Yes, that's for trading stocks. For productivity and maintaining your team aligned and everything else, I do love Slack. That's one of my favorite apps, Slack.
Edwin, thanks for coming on the show. Really interesting conversation. I appreciate you sharing your experience with us, especially what you went through in 2008 and just how you put your systems, your processes together to be successful in so many different types of businesses. It's been a real pleasure talking with you.
Brian, thank you for having me, and I appreciate it.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Estate Investor podcast. And remember to save the date for the Midwest Real Estate Investor Conference on April 24th and 25th of 2025 in Grand Rapids, Michigan. It's going to be an event you won't want to miss, packed with invaluable sessions and opportunities to connect with like-minded investors. Keep listening for more updates, and we look forward to seeing you there. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.